Okay, let us now understand what are the provisions for the set-off and carry-forward of losses. So the first one is short-term capital loss. Now a short-term capital loss can be set off against both short-term capital gains, which is fair, and you can also set it off against long-term capital gains. Now, just to clarify, a short-term capital gains under the Present Income Tax Act is chargeable to tax at the rate of 30%, whereas long-term capital gain is chargeable to tax at 20%. So, the logic behind allowing short-term capital loss to be set off against both of them is that, if suppose, let me take you to the drawing board. Let's say, suppose you had a short-term capital gain of 500,000 and a long-term capital loss of 400,000. Situation 2, you have 400,000 here and 500,000 here. Let's see the provision. Short-term capital loss can be set off against long-term capital gains. Now, so you can set this off against this and you pay taxes only on 1 lakh. Now, if I would not have carried this forward or have not set it off, what I will do, I will carry it forward. And next year, if I set it off against, let's say, this 5 lakh, the normal tax payable on 5 lakh at 30% is 1,50,000. If I set off this 4 lakh against this, I will pay tax on how much? 5 lakh minus 4 lakh on 1 lakh at the rate of 30% is equal to 30,000. So what's my saving? I would have paid 1,50,000 if this set off was not available, and I paid 30,000 after set off was available. So my saving was 120,000, right? Whereas if I set it off against this year, the tax which I would have paid on 4 lakh is the set off which is allowed. On 4 lakh, if this would not have been set off here, would have been 4 lakh at the rate of 20%, 80,000. So that's the reason why a short-term capital loss can be set off against both short-term capital gain and long-term capital gain, whereas a long-term capital loss can be set off only against long-term capital gain. Now this carry forward is permissible for 8 assessment years. So if suppose this loss cannot be set off completely in the same year against these two, then carry forward is permissible for 8 assessment years immediately succeeding the assessment year in which the loss was computed. Okay.